Welcome to the Dr. S1-Ep.4 podcast. I have various U.S. and international accounting and tax designations, a master's in tax, and a PhD in business administration with a concentration in finance and accounting. Over the past 2 decades, I have helped several SMEs succeed. This podcast will provide strategies and resources to help startups and existing businesses thrive. Let's get started.
Hello, everyone. Okay, today we have another interesting topic. But I just wanted to say hello to everyone and thank you for so much. Okay, today we have another interesting topic. But I just wanted to say hello to everyone and thank you for so much. Okay, I think it's echoing. But I just wanted to say hello to everyone and thank you for so much. Okay, I think it's echoing. Let me get that out of the way. Oh, yes. I just wanted to say hello to everyone. Yes, I think it's just going to get that out of the way. All right. It was echoing, so I've taken care of that. Make sure everything is okay. And yes, so now what I'm going to discuss again. Thank you everybody that has joined and that's watching and that has been commenting. Really appreciate that. So today is going to be something very different. Today is the first day of the month of November, and just wanted to be very appreciative. Right here is the Thanksgiving month, but just wanted to make sure that we're very appreciative. It's not easy to be alive up to the 11th month of the year to 2022. All right, so it's going to be a little bit different. First of all, of course, I always start with my first segment where I discuss some relevant topics regarding any small business, right? So today I'm really going to talk about retirement, right? So many small businesses, they miss it and they say, okay, they're in the process of, they have a small business, but they don't understand that even as a small business, you are able to have retirement plans, and there's various retirement plans, but I'm just going to focus on the IRA-based plans, all right? Again, various plans out there, profit sharing, various. But today I'm just going to, focus on the, again, IRA-based plan, right? Okay, there are some that are just, they are IRA payroll deduction plan. That's the first one I'm going to talk about. Now, sometimes somebody might say, small business might say, I really don't have the funds to really go into retirement benefits from my staff, right? Or for even me. But, there are so many ways around it where that the company does not really have to pay for this retirement, right? It is a plan that is set under the umbrella of the company, but payment is made only by the employee. All right, that is the payroll deduction-based IRA. What happens is that anytime the company pays the employee might decide that, okay, yes, I've been paid, and so based on that, I am going to get a deduction. All right, I'm going to get a deduction. All right. Just wanted to make sure that everything is good. Just trying to make sure that my so just wanted to make sure that the sound, because I'm just saying that let me see if my sound is working on so make sure. Okay, so just to continue, I'm just making sure that I did check this, but I think the echo just made it a difference. So let's see. All right, let me make sure that everything is okay with the sound. Okay. All right. All right, yes. Okay, yes. Just so, yeah, I just want to make sure. And so, as I was saying that, sometimes you might feel that, okay, you can't really contribute for the employee. So this allows your employee to take a deduction from his or her paycheck. And with that, it is part of this payroll deduction IRA plan. All right. So the beauty of this is that it's so easy to set up. It's so easy to set up. And also, it doesn't affect the employer. The employer is not contributing money. So you might say that, oh, my company is small and we don't have the funds to do that. Then the payroll deduction IRA would be a way, an avenue for you to look at, right? Because with that, the employee would just be able to contribute money to that IRA, right? Under the umbrella of your small business. Another thing that people do look at is that, okay, what is the amount? What is the maximum? Their maximum is $6,000. $6,000 for someone that is below 50, but if it's over 50, 1,000 is added, so it's $7,000 for the year 2022. So yes, that's a plan that you might be able to. You might even think of just taking part of for your staff, and it's for people that have one staff or more. You can have one staff or more that will benefit from that, okay, from one staff or more. So that is one of the plans that you might decide to go with. All right. So that's payroll deduction. It's so, I cannot overemphasize the need for retirement, right? Many small businesses assume that they can work forever, small business owners, right? So I would say that, yes, it's good to work, be hardworking, but keep money away for retirement. Keep it away, just, and just, you might say, I'm starting late. It doesn't matter. Put something away, right? I would suggest that you sit down with your staff or even yourself. It could be yourself and just, well, you won't sit down with yourself, but just to really sit down and think of what can I do to make sure that I can, put in, start a retirement plan. All right. Now, as I said, one of the great things about the payroll deduction IRA is that there's no, an employee can say, you know what, I want to contribute this amount this year. There's no, there's no strict rule as to say that you must contribute this amount, you must contribute, there's no strict rule like that. All right. That you have to contribute a certain amount every single month. No. It's flexible, right? And that's the beauty for small businesses, that payroll deduction IRA is very, very attractive, right? Okay. Another one is the SEP. The SEP is similar in some ways to the payroll deduction, in ways where I say that it is not very complicated to set up. You can have as one or more employees to set up, right? So that's the similarity with the payroll deduction IRA. Now, the only aspect here that is a bit different is that in this case, it is really the employer that pays the money. Okay, the employee does not pay anything. The employer pays the money into the retirement plan for the employee, right? For the employee, yes. Now, some small businesses that have one owner says, you know what, I want to do it for myself. What happens is that the amount is 25% of the compensation of the employee, or for 2022, I believe it's 61,000, which the lower of the two. All right. So you might say, okay, yeah, remember, it's a deductible expense. It's deductible. All right. That's the good thing, is a deductible expense, right? But in this case, there's criteria, right? If you have more than one employee, you have to make sure that if that employee is over 21 years, has been with working with the company for 3 or 5 years, that three of the 5 years that you want to set up the plan, if he earns up to $650 a year, that person has to be part of the plan. Right, it's not, you cannot say that, okay, I'm going to, it's just do it for myself. You cannot do that. All right. So I just wanted to make sure we are clear on that. So another form of IRA is the simple IRA, right? The simple IRA plan is a bit different because it's for people that have 100 employees or less. Remember, the other two, anybody can do it. But in this case, 100 employees or less, right? And then, of course, is more administrative work to set it up. But in this case, is really is both. In this case, is like it's different from the payroll deduction IRA, because the payroll deduction IRA was just basically the employee. The SEP IRA was what? The employer. Now this simple IRA combines the two, right? Because the employee contributes, right? The employee can contribute up to, I think, about 13,000, and the employer, at 13,500. Then if you're over 50, you add 3,000 added. Then the employer must match it. There are some criteria that is set in place. The employer must match that. Now, in this case, what is the criteria? Well, if the person is not the salary is not as low as that for the SEP IRA. The simple IRA, the person must have a salary that is about 5,000 in the last 2 years, and you believe that person will still make about 5,000. So it's really salary based. And so that is really, really the difference. Now, when you're comparing these three, right, they're all vested, meaning that they can withdraw, your staff can withdraw as they can withdraw anytime. The only thing is that, of course, we know that if you withdraw a retirement benefit before a certain age, you get penalties. Then you get, you get, penalty. When I say penalties, you get penalized, right? So you want to make sure that you don't do that. Of course, there's exceptions to the rule. And so, these are just the basic IRA, I'm not talking about profit sharing. I'm not talking about 401k, but, the IRA, the SEP, the simple IRA, the payroll deduction IRA is actually something that is very attractive to small businesses. I'm not saying that the profit sharing and the rest are not, but I would advise you to please pick up one of these and, talk to your financial advisor and say, let me see which one would work for me, because, at the end of the day, it's very important for you to set up a retirement plan, and your staff will be very happy. Remember, one of the episodes I spoke about was one of the episodes I spoke about was about how to retain your staff. Right? How to retain your staff. And that's one of the episodes I spoke about. So it's so important that you things like this makes people happy. That is, when I retire, I'll be able to have this, I'll be able to have that. Okay, so make sure you're on point and really looking out and say, okay, what can I do for my staff? Retirement benefits are very important. Many small businesses do not have that. So please put something in place for yourself if you're the sole owner of your business, or for your other staff. Now, please also make sure that even as you're looking at all this SEP and all this simple IRA plan, or even the other one, the payroll deduction, you look at what really works for your company, right? If you know that that you can match, then you don't go for the simple IRA. Right? A financial advisor might say, oh, this would work for you, but you have to look at based on, can you match it? Is this something you want to do? What is it that you're looking at? All right. So make sure you look at what works for you and to choose the right retirement plan for your staff, for yourself, and you don't have to look at only when you have employees. think of yourself. I know there are so many companies that actually have themselves as the sole staff. That's fine, but it's very important for you to put a retirement plan in place. All right. Make sure you do that. All right. Okay. So in this section, I always take calls or questions, but in this time I have some messages written that I'm going to look at and respond to the questions. All right. Okay. So the first question is, how do I deal with rude customers? Well, I would say that I know that, there's customer services that tells you that the customer is always right, but I would say it depends on what you mean as rude, right? Rude. Now, I would say if somebody is rude to you, sometimes people expect a reaction from you that will justify their rudeness. But if you respond to that person in a way that the person would be you respond to that person in a very nice way, and even you could actually be apologetic if you feel that you have offended that person, and a lot of times the person steps back and says, oh my goodness, look at what I said to him, look at what I said to her, but she turned around and she still relates to me responded to me in a very kind way, and steps back and realizes, right? Now, if somebody's rude and with words, bad words, and things like that, well, you cannot really deal with that kind of person. You have to look at your own safety. And if that's the case, of course, you have to get that person out of the environment, or, move away from an environment if you are able to do that, because you don't want to get hurt. You don't want to get in, want to have issues, with that person. But I would say that, always respond nicely. Always look for a way of being nice, being nice. It could be, honestly, sometimes people are going through a lot, and it's not you, it's the reaction of what they are going through that causes them to be what they are. And it's not really targeted towards you. Sometimes they had a bad day or a bad situation, and because of that, they just feel bad. I've seen cases I've heard of, even I won't say I've experienced, but I know someone that's close to me that said how somebody was always not nice to the person, and one day she responded in a nice way, and I think the person just broke down, or some people just feel, when they realize you're not giving it back to them, like they're, rude, you're not rude to them. A lot of times, not always, the person says back and realize, oh my goodness, why did I talk like this? Why did I behave like that? So how do you deal with rude customers? Be nice to them, unless it becomes something that that is an abusive way of talking to somebody. Of course, you have to move away from that environment before it can turn to something else. All right. You have to protect yourself. All right. Very, very important. All right. So the next message I got was, I have a high accounts receivable balance. But I have low cash flow. What do I do? Okay. Now, if those that don't know what's accounts receivable, now, sometimes people say, you know what, my customer should pay me in 30 days, in 60 days. I mentioned that when we're talking about planning, somebody said, oh, my cash flow, how do I manage my cash flow? I tell people, pay your bills late. When I say late, I'm not saying after the due date. No. Sometimes bills will say pay within 30 days, pay within 60 days. Take advantage of that. It could be somebody says, you know what, pay me within 60 days. That's fine. But you should, on the other side, get your customers to pay you within 30 days, right? So if you get money within 30 days, it means that you're constantly getting money within 30 days, 30 days, 30 days, and you're paying within 60 days. So you're always having money, you always have money, because that's cash flow. Now, in this case, if you have a high accounts receivable balance, meaning that you have people are going to pay you, but they're taking long to pay you, that 60 days, 90 days, they're taking so long, you should first of all correct that. correct that, long payment time, correct that, 60, correct that. But also what I would say that is that in addition to correcting it, I would say that, sometimes if you have accounts receivable that is taking time to receive, sometimes you can actually visit a factoring company. What does a factoring company do? A factoring company, actually, if you have a bill, let's say, a bill that maybe $1,000. I mean, it's really most factoring companies, it's not really 1,000. Maybe I know people have 20, 30, 50, 100,000, right? And they just want the money, but they can't get the money because it takes 30, 60 days, to get the payment. They visit a factoring company. The factoring company said, okay, you know what? 100,000, I charge you 3% on that 100,000, right? That's for, for being able to cash, give you the money, upfront money. All right. So that's a factoring company. People who have taken advantage of that and said, you know what, I don't mind paying the 3%. I don't mind paying that. I just want to have cash because I want to continue running my business. All right. So that's what I would say, that especially if you have high accounts receivable, even some banks will actually, work with you and say, especially when that they know the accounts receivable are not bad debt, meaning that those companies will actually eventually pay you. And they have been paying you just that because of your time, the time you give them to pay. That's why there's an issue. So make sure you're doing that. Okay. Then finally, the final question here is, let's see. It says, okay, can an entity be an owner of a partnership? Okay. I would even say of a company, can an entity? And I will say the big answer is yes. yes. It can, but of course there are conditions that apply. If sometimes people say, you know what, I don't want to go as myself. I want my entity to be a part owner of that. I want my entity to be a part owner. Like they want to set up a company, the company, they have a partner. The partner says, you know what, I want to set up the company with my own. I want to set up the company with my own entity. So the partnership will come is that Jack and entity ABC will set up and it become a partnership. The partnership has Jack as a partner and ABC as a partner. Yes, it's doable. You can do that. You can do that. Of course, the exceptions, if you want to become an S Corp and things like that, that's different. But yes, you can actually have an entity that is that is part of a partnership, right? It can set up as a partnership. A lot of people do that. Why? Liability. They don't want it to come back to them. They want it to end with the entity, right? They set up a couple of entities to make sure that those companies are just, the companies just are like that the companies are remember, when you have a company, it's different from you. And so generally that is it. All right. Okay. So these are a couple of questions. I know, as I said, email me. I will still read them on the platform here, or call me, send me a voice recording. I will still do the needful. All right. Now, I said today we're going to do something a little different. This is the 11th month of the year. And so I just wanted to put out some major advice out there. I mean, I usually give a tip and then somebody comes in and, talks about their issues. But I said today, let me just talk to my viewers and let them know that there are certain things you need to do as a small business as the year is running to an end, right? So very first thing you need to do is that you have to, don't wait to the last minute, make sure you're sitting down, planning. Make sure you're talking to your accountant to see what is it that you need to do, what is it that you need to correct, what are the things that you need to do as a tax, as in your taxes. You have to talk to your accountant to see what is it that you need to do. The year is coming to an end. This is the 11th month of 2022. A couple of weeks, we would end the year. So I wanted to sit down and just elaborate on a couple of things or highlight a couple of things that you need to do. Make sure Now, another thing is that I've talked about IRAs, right, for the company, right? And it doesn't prevent you as an individual to also look into, if you want to also have an IRA for yourself. The company can have it for you, but you can also have it for yourself. I know the payroll deduction one, all right, that is having it for you're already setting up for the 6,000, the other one, the SEP, remember the SEP, the company is doing it for you, right? And the other one, which is the simple IRA, you are contributing, you're contributing and your company is contributing. But you can also think of setting up something for yourself. There are difference between, somebody might ask, okay, which one is it? Which one do I do? A Roth IRA? Do I do a traditional IRA? Now, people get confused and by choosing the Roth and the traditional. So which one do I choose? We know, okay, those that don't know, the traditional IRA, is basically that you get a deduction for any money you put in the IRA, so it's tax deferred. When you withdraw after retirement, you withdraw that money, you pay the taxes. The Roth IRA is opposite. You pay the taxes now. When you withdraw it after retirement, you do not pay the taxes. Then you ask yourself, which one works, right? These are all ways that you think, right, as you're moving towards the end of the year. Because you might have an IRA that is a traditional IRA and you say, you know what, it's time for me to change it to a Roth IRA because it's more beneficial. Okay. Now, let me tell you what the kind of planning you would like to discuss with your tax practitioner or your financial advisor. Now, if you know that when you retire, you're going to have a higher tax bracket. Okay. When you retire, so many people set up their retirement very well. If you know you're going to have a higher tax bracket, what you need to do is that this is the time to have the Roth IRA. Pay your taxes now. Pay your taxes now, so that when you withdraw the Roth IRA after retirement, guess what happens? You do not, right? What happens is that you don't need to think of paying taxes on the Roth IRA as at that time. Okay. Now, if it's the opposite, you know that you're going to have a lower, you're looking at your tax bracket that is very, that now is higher, later it's going to be lower, then there's no need it's okay. The traditional is fine because you know that at the end of the day, this is what's going to happen, right? So tax planning. Now look at, if you're a business owner, as we're talking about all to business owners here, look at, is there some deductions you haven't taken? If there's some things you haven't done that you can maximize your tax, your tax payments, which you reduce your tax liability. This is the time for you to sit down and check, what do you need to expense? What do you need to pay for? Is there any payment that you can make now so that you can really take that expense in the year 2022? So are there expenses that you haven't taken? I know that in one of my episodes, I spoke about ordinary and necessary expenses, right? Ordinary and necessary expenses, right? These are the ordinary and necessary expenses that look at your business. Is there something peculiar to your business that other people don't have? I talked about someone that is a clown in one of my episodes, that a clown will take makeup expenses, right? Peculiar to a clown, a business that deals with clowns. There are other businesses that take makeup, but I just remembered, a clown, right? Clown business, right? Makeup, a business without a clown, without a makeup is not a clown. We know that. we know that, right? So you have to look at what applies to your industry, what applies to you, right? What do you need to make sure you're going through your books, making sure, right, that you've exhausted all your expenses that you need to take, and if there are some that you're looking at digging, making sure you're getting everything right. Now, I mentioned before that you should hire your kids, make sure that everything is documented, hiring kids, hiring family members, because one thing the IRS looks at, okay, you're hiring your family members. Are you hiring them in a correct pattern? Are you doing the right, hiring them in the right way? That's what IRS, the Internal Revenue Service, would look at, okay? Is that what you're doing? Are you documenting their hours? Are you making sure that they're paid into their bank accounts, right? Even if you want to move that into an IRA, very fine. Make sure you do that, okay? I'm just that's for the the employees, and then make sure that you're looking at, okay, even if you're bringing somebody in on staff, is that person going to be an independent contractor? Is that person an employee? Make sure the rules are put in place that you are following. Now, I'm not saying that you have to know the tax law, but work with an accountant, right? Meet with an accountant, right? We are offering some relief for people that call in and or just email us and they want to have a question. We give them a discounted rate just for them to come in and then ask questions if you don't want to come in for us to see you live, right? So just make sure that you're looking at documentation. You're looking at making sure that you're maximizing all your benefits. When I say benefits, because your deductions are your benefits, right? When you deduct when you have your deductions and you don't pay as much taxes that people think that you should pay, that's a benefit to you, right? And of course, other benefits I would say, because as I said in one of my episodes, and I repeated this before, between 2020 and 2021, we had 3 different tax laws, provisions, changes. Now, I know that we're going towards the end of some of the provisions that will provide, some of the provisions, but make sure you're maximizing. One of the provisions is that in 2022, one of the provisions that is in place for 2022 is that if you eat in a restaurant with in a restaurant for a business meeting, 100% is deductible, right? 100% is deductible. It wasn't like that before. It's specific for 2021 and 2022. So 100% is deductible if it's business eating at a restaurant, right? So make sure that you're all those expenses, you're taking note of all those expenses, right? Making sure that you're maximizing everything we talked about. Making sure that if you're employing family members or you employ family members, documentation, you're doing it correctly, right? Making sure, and then also making sure that if you do have an employee, your tax remittances are sure. Again, if your employee is not an employee, that if you realize your independent contractor is not supposed to be an independent contractor, you make sure you discuss with your accountant and reclassify that right, that worker, and make sure you ask for relief, right? I'm highlighting this is high level, and because different people have different peculiar situations. So I just wanted to use today because, again, we're almost at the end of the year, right? And most of us are calendar year taxpayers. What does that mean? Most of us have, our year is January to December, most of us, right? Even businesses, January to December, most of the, so what we're almost there. And I just didn't want to wait until the next month to tell people to start getting things in order, right? This is the time for you to sit back and look at what is missing, what you need, what do you need to put in place. All right. So that is for businesses. And then also look out for benefits. When I say benefits, I'm talking about the legislature benefits, because there are some benefits that are available for small businesses. So make sure that you've really picked up on all those benefits. Now, one of the things that happened in last year in 2021 was the employee retention, that the employee retention credit, right? If you did not get it in your filing of 941, go and do an amendment and get your retention credit, because it's still proactive. You can still do that. So go through the legislatures, make sure that you look at all the provisions, the legislatures, which is, when I say legislature, I mean the provisions that were enacted between 2020, even beyond that. But I know that the major law that changed was we had the TCJA, Tax Cut and Jobs Act. And then, of course, we had in 2020 to 2021, we had 3 provisions, the CARES Act, the CAA, and the American Rescue Plan Act. So it's for us to, sit back and make sure that you benefited from everything. Now, because you might say, oh yeah, yes, and that's why I brought that employee tax credit, or the year has passed. You can go back and check and make sure you have all those benefits, all those provisions. If you need to amend anything because you now know, please go ahead and do that, right? So this is a time for you to sit back and check, right? And make sure you maximize and go back. And as I said, this is high level. Many companies, many businesses have different situations that apply to them, right? My practice, although I do my podcast here, but I also speak at I do other events, speak at different events, and I also do a lot of presentations, right? So that is different from someone that manufactures, right? So what applies to me, and of course I have my CPA firm. So what applies to me and my practice is different from a company that is into manufacturing. So look at the credits that apply to that manufacturing company, to that manufacturing business, right? Another thing I want to state is that please be friends with with the network. I'm not saying you should not. I'm not saying you should not have friends everywhere, right? I'm not saying that. I'm just saying that be friend. Okay, get information. I would say, let me not use the word friend. Okay, everybody, I'm not using the word friend because, of course, I have friends in different sectors, right? But I'm just saying that I shouldn't use the word friend. I should say just connect, network with people in your own industry, right? Because, I see that when you network with people in your own industry, you find, or in your industry, you find information, a lot of information that generally you will not have known, right? Some people read more, some people have access, some people know how to, hear more, or maybe they get information, they get some information from emails, right? And because they're in a maybe manufacturing, if you're in a manufacturing society, and they get information from from emails or things like that, and then they can take that and say, okay, this is what I'm hearing. Is this true? Is this true? But I want to make sure we understand that you have to be careful. And when you get information if you get emails from anywhere, make sure you go to your if it's something to do with accounting, tax, go to your tax or accounting professional and check it out. Make sure it's real. Make sure it's not, news that is inaccurate, right? As an accountant, when I go to the internet, there's something I see. I read things that I know that they are not true when it comes to my profession, because this is what I do. So people, remember, the internet is for everybody. Anybody can email anybody can write anything, right? But when it comes to professional technical knowledge, make sure you go to the source, go to who wrote that, what do I need to know? What is relevant? I need to understand the relevance of what I am really, really doing, right? So that I can make sure that my that what I'm reading is accurate, right? Get it from is what I'm reading is accurate. So you have to make sure that that's what you're getting when you get something, when you read something. Because you just go to the source. Okay, it's so important for you to make sure you go to the source. So just to emphasize, make sure you're networking with people in your industry, see what the trend will, see what's happening, see what's going on. And then if you get any information that you need to clarify, go to the source. All right. So just wanted to just have it out there, especially again, as we're closing out this year, very grateful that we're in the 11th month of 2022. It's not easy to be well or even here in 2022, November, in the 11th month. But remember, the goal of this platform is to make sure your business thrives. So this is just to make sure that you step back and take pace, and just step back and just appreciate. First of all, step back and just appreciate your business for where it has gone, where it has got to so far. People measure standards, but I would say kudos for you to have a business that survived and is still bubbling, is still moving forward, right? In this year, 2022. So give yourself a pat on the back, but the goal is to make sure that this business continues to thrive, continues to move forward. So this time, in this November 1st, the first day of November, moving forward, as you close out the year, step back and really sit back and see what is it that you can do to close the year fantastically, making sure that you've dotted your I's, crossed your T's, make sure there's nothing that you haven't taken advantage of in respect of credits, in respect of when I say credits or provisions for small businesses. As I said, no matter where you are in the world listening to this, know that small businesses make the economy, right? A large percentage of small businesses make the economy around the world. So usually there are so many benefits out there for the small business. But what I've seen, that if you don't know, you can't benefit, right? If you don't have access to information, you cannot benefit. So seek information, find out, right? And really, really, really be proactive in looking for ways to improve your business. I'm hoping that as you continue on this platform, listening on this platform, that really, 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 you'll be able to really get something or more information that will make your business thrive. Again, as I round up, be very grateful for where you are, for what you've achieved, for getting to where you are today. Sometimes we wait for people to comment or compliment us and say, "Oh, you've done a great job." I would say that sit back and just give yourself a pat on the back, regardless of if somebody says you've done a great job or not. It's not very easy, as I said. I mentioned this before, but I just want to reiterate, to have a business is not an easy task. You have to wake yourself up. You have to push yourself to make sure you're successful. And I think that's kudos to everyone that is listening, that has a business, has started and is moving forward, right? There are different phases, and we're just hoping that you continue to move and thrive forward, all right? It's going to get better and better and better and better, right? And just wanted to make sure that I put it out there, and wishing every single person listening a wonderful evening. And of course, we'll see next week. Again, if you have questions, feel free and to reach out by just visit my website. All right. Okay, then I think that's it for today. I will, if you just listened for details on how to make sure that you are subscribed. Again, subscribe to the website, subscribe to the YouTube channel, because even though this is a podcast, I also have it on YouTube. All right. Have a good one. Okay. Bye for now.
Thanks for having me. Remember to join my live podcast on Tuesdays, 6 to 6:45 p.m. Central Standard Time. Visit my website, driniadesnia.com, for details. Till next time, bye for now.